As I mentioned before, I'm going to introduce to you another source that we can use upon calculating weighted average cost of capital. Of course, many of the data sets here might not be completely free because I believe this institution is a profit organization, but they do provide us with current normalized U.S. risk-free rate and current recommended U.S. equity risk premium. So we are going to use these two numbers as one of the scenario inputs upon our weighted average cost of capital calculation. So let's move back to our spreadsheet and let's add another column for, let's start from risk-free rate. Let's erase the existing data. And we're going to add another cell, another row for risk-free rate. So we're going to have three individual options to choose risk-free rate. Our last option, as we just saw, is going to be the recommended risk-free rate from our Kroll source. So Kroll recommended risk-free rate, which was 3.5%. And then what we're going to do is we have the 10-year treasury yield, 10-year government bond, historical yield data. We're going to try and utilize this data as well. So do we want to use the current risk-free rate, or do we want to do some kind of historical average and say that risk-free rate in the long term will follow 5-year historical average? So we want both numbers. So we're going to do a 10-year US government bond. We're going to do a current yield as well as a 5-year average. So current yield would be as of the last pricing date. So 4.1%. Of course, we want to divide it by 100. So 4.1%, since interest rates recently has been very high. 5-year average, hopefully this has a much lower risk-free rate. So this whole part, this data set is a 5-year data set, so we can simply do an average of the entire rows and divide it by 100 as well. So yes, as suspected, 5-year average has a much lower interest rate. Current interest rates are historical at its historical highs, and Kroll recommends somewhere in between these two interest rates. So since we have 3 individual input options, we're going to make a little bit of scenario. We're going to make a drop-down menu to select which source the analyst wants to select. So we're going to make risk-free rate is here. So we're going to make a input cell. And as you remember, we're going to go to data. We're going to go to data validation. We're going to choose list. And the list is going to be current or 5 5-year average. And then crawl. Right. And as we did in our scenario analysis task, we're going to use a if function and designate an individual number for each individual scenario. So if this equals current, we're going to make it spit out 1. And then again, if this equals 5-year average, we're going to make it spit out 2, and then 3, just otherwise. Whoops. So let's test if it works. So current spits out 1, 5-year average spits out 2, crawl is spitting out 3. I'm going to hide the numbers. And then here we used the choose function. So this is kind of like a recap of scenario analysis. We're going to use the choose function. We're going to choose from these numbers over here. If the value is 1, we're going to choose the current interest rate. If the value is 2, we're going to use the 5-year average interest rate. And lastly, if the number is 3, we're going to use the Kroll recommended interest rate. Yep. And the data input changes according to our scenario input. So that's going to be it for calculating risk-free rate. And let's move on to calculating equity risk premium. We're going to do a very similar process of what we just did.